The S&P 500 is hitting a very major trendline level of resistance. This is not the time where you want to become exceedingly bullish. This has been a very major trend line that we've been monitoring for 2 years. As you can see, it has been acting as a major level of support since October of 2023. This bounced. We got a perfect wick, perfect touch as a level of support back in August of 2024. And then most recently, zooming out, back in March, when the market got a pullback, what ended up happening? This trend line acted as a phenomenal support, but then once it broke, we got the bounce back and it failed. This acted as a very major level of resistance. What ended up happening afterward was the market capitulated in a way that we haven't seen in a very long time. After the fail of this trend line, you can see that we got a very major pullback down to the April lows, which is when we caught the bottom and ended up going long. Fast forward now, we are retesting this same trend line. So is this trend line a time where you want to start becoming bullish? In my opinion, no, because I ended up taking profits on some of my longs. I'm holding on to some runners because overall I think the market is bullish. But in the short term, guys, in my opinion, this is not the time where you want to start going long. In my opinion, it becomes the time to start taking profits or getting some cheap hedges to start leaning short. So I'm going to go more in detail in this video of why I think that's the case. I'm going to go over the large tech stocks that are showing some overextension. We're going to take a look at the IWM, the NASDAQ. We're going to take a look at the crypto markets, Forex, gold, and the VIX. All that good stuff. If you guys enjoy the videos that I make, please make sure to like, comment, subscribe, share it with your friends and family. It would really help, and I hope you guys enjoy the video. Let's get started. First and foremost, shout out to Steve Peterson for the $5. Really appreciate the super chat. Thank you for the support. So now what I want to explain is that people like to go short at two different places. Either at levels of resistance or when it becomes a profitable situation to start taking profits. Okay? So if you're in 0DTE options and a trade is up X percentage, maybe 100 or 150% on the trade, naturally that becomes a good opportunity to go short or to take profit, right? Not necessarily to go short, but what I'm saying is it becomes a good opportunity to take profit. So now, at a level of resistance, does it become a good opportunity to go long? No. It becomes a good opportunity to take profit on your longs and to go short. So at this situation right now on the S&P 500, we ended up taking some profits on our longs. We were in July, August, and September calls from down here in April and sub 5,700 on the S&P. So we've been long for a very long time, and we've been just riding the wave to the upside. With that being said, because right now becomes a very good opportunity to become so essentially because this is a very good opportunity to take profits on your longs, coupled with the fact that this is at a level of resistance, these two factors indicate that the market is really struggling, or it's going to start struggling to rally up, because the buying pressure is not going to be here as much as it has been over the past couple of months, in my opinion. Because number one, all of the people that were bullish down here at 60.50 on the ES. They were bullish into the lows at 5,000 on the ES. People are not going to start becoming bullish at 6,300 on the ES. Because people are not going to become bullish up here, what does it tell you? It tells you that people are going to start taking profits from their longs, and people are going to wait for a pullback, for a move to the upside to occur. New bulls are not going to enter, in my opinion, unless we get a close above this trend line. While we're trading below this trend line, New bulls will not enter the market, in my opinion. So with that being said, you guys just have to understand now is not the time to start becoming extremely bullish. What you want to do, three main things. Number one, you can wait for a pullback to go long. As I've been saying, every pullback that we get is going to be a good long opportunity for 3 to 6 months out. Easy. Not a financial advisor. This isn't financial advice. Every dip is a good buying opportunity. Even if we see 6,000 on the ES, every dip is going to be a good long-term buying opportunity. And that's number one. Wait for dips. Go long. Number two, sit on your hands. Don't take any trade. Don't do anything. Number three, go short with a longer term horizon. And that is most likely what I'm going to end up doing over the weekend. I'm most likely going to start entering into puts starting this week. And what my thought process is that in the next week or two, the market should be getting a bit of a pullback. What I'm going to do is I'm going to start taking puts for 2 to 3 months out. There still is more upside room. The market is still very, very bullish. I'm not going to sit here and say, oh, that's it. This is the top. I'm going to become bearish now. I could be wrong. But I'm right more times than I'm wrong. And what I would rather do is if I do think there's going to be a pullback in the next week or two, I don't want to buy options that expire in the next week or two. I want to buy options that expire in 2 to 3 months out. So that even if in the next week or two we rally up to 63, 50, 64, etc., right? 3 weeks down the line, we could get a massive spike lower. So my 2-month outputs that I get up here are going to be profitable eventually. So I just want to buy into some puts with some time, and that's essentially what's going to end up happening in these next coming days. I'll give more detail to the members in the chat, but this is my overall thought process. This is my analysis. And I'm going to give you guys a bit more reasoning of why this is my analysis. Now, I want to preface this once again. There is clear-cut strength in the overall market. I'm not saying that the market is going to pull back in the next coming days and we're not going to make new highs. Yes, we could get a pullback. We can make new highs, get a pullback, make new highs again. I don't know how the price action is going to occur. What I do know is that this is not a favorable time to go long. Purely because overall this is not a good time to go long. And bulls are becoming very euphoric. And a lot of people are starting to chase. It's time to unwind some of the long positions. Because it's a good time to unwind some of the long positions, it's a good time to start leaning a bit bearish, in my opinion, unfortunately. So what we're going to do now is we're going to take a look at some of the large tech stocks that are showing some overextension. We're also going to take a look at the IWM. The IWM is also showing overextension. But one thing at a time, let's start off with the tech stocks. Number one, let's start off with Apple. Apple's been a loser. It's been a complete lagger. And it has been very, very weak. Where the SP500 and the NASDAQ have been making new all-time highs, where's Apple? Apple's just barely bouncing off the lows. Yes, I was bullish on Apple down here at 200. I posted on Twitter saying that Apple was going to start rallying, break out of the bull flag. That's exactly what ended up happening. But now, ironically enough, I created a fib level from the recent highs to the most recent lows. And the 50% fib level is at 2. Look at how interesting this is. Look at how perfect this works out. The 50% Fibonacci level was at 214.66. Where was the high that Apple touched on Friday? The high was at 214.65. 1 cent below the 50% fib. This is completely algorithmically driven. We remained 1 cent below the 50% fib. Now, that, in my opinion, is not great. Number two, we are trading out very overextended, according to the Bollinger Bands. We are opened and closed outside of the upper level of the Bollinger Band. This shows extreme overextension, according to the standard deviation above. The positive standard deviation. So generally what happens is when you are this overextended, what tends to want to happen is price wants to return back into the mean, into the Bollinger Band. We have to see if Apple either stagnates here or gets a pullback. But the level that you want to see Apple hold is above 211, 210. If it can hold 210, 211, sure. If we get a pullback and hold 210, 211, we can continue. No problem. And then we can end up breaking above the 50% fib. Do you want to start going long on Apple at the 50% freaking fib while we're overextended to the upside on the Bollinger Band? No, not. You do not want to go long here. Because you do not want to go long here, what should end up happening with the market? We should get a bit of a pullback. Very simple. That's my logic. Generally, this is what ends up occurring. So that is my thought process on Apple. Next, let's go ahead and take a look at Meta. Meta is not showing that much bullishness either. Meta is looking very, very similar to AMD. AMD and Meta are both sharing similarities in their charts. They're both creating bear flags. Bear flags are bearish patterns. What ends up happening is a move to the downside. AMD doesn't look great. Meta doesn't look great. If AMD breaks below 136, we're going to see 130 on AMD. If AMD starts to tumble, what's going to end up happening to NVIDIA? NVIDIA is also going to get a pullback. AMD doesn't look great, but as long as it holds above 136, it doesn't need to look great. If it holds 136, it gets the job done, and we could continue rallying. 136 is a very major level for AMD. But AMD and Meta don't look fantastic. Netflix also doesn't look fantastic. Netflix has been in a very extreme uptrend since April's lows. We've held this trend line very, very well, and now we are retesting this trend line. We didn't get a close above. We closed below. We retested, and we failed. If Netflix does not reclaim this trend line, this is leading to a bit of a pullback on Netflix. With this failed uptrend level retest, this is generally not the best bullish sign. Obviously, right? If we're failing to break above an uptrend level, generally bulls are going to start getting fatigued. Bulls are not going to want to try to long up here. Instead, bulls are going to end up giving up, and we're most likely going to see a retest to around 1240 on Netflix. This is most likely where Netflix is going to want to try to bottom and make a bounce. So all eyes on Netflix, whether we can break above this trend line. What bulls really want to see on Netflix is a break above 1310 on Netflix. If that can happen, then this little 2-day travesty is not going to hold that much weight. But overall, guys, Netflix, Meta, Apple's overextension to the upside, and AMD not looking great. Pragmatically, though, not everything looks bearish. Okay? Google does look bullish. Google was another stock that I was saying was going to break out of this downtrend level. Looks decent. They're trying to paint a very bullish picture on Google. By all means, this is not extremely bearish. We held above 180. We closed above 180. In the next coming months, Google is going to end up seeing above 190. I'm very, very convinced of the overall bullishness on Google. Microsoft, continuing to hold this uptrend level. Microsoft also looks bullish. We had an uptrend level from May. It's been acting as complete support. We got a bit of a pullback down here, but overall, we've been hugging this level, this trend line, and it's been bullish. So you cannot just randomly say, oh, yeah, this is bearish. The overall market is bearish when Microsoft is doing things like this, right? That's the issue. We're seeing mixed signals. NVIDIA also clearly making new highs. Lots of strength in NVIDIA. The weakness in AMD is concerning, though. But NVIDIA is really, really trying to pull its weight, and it's continuing to show strength. You cannot ignore that, right? Tesla held the 300 level. I was saying every pullback on Tesla, go long. We held the 300 level, And now we are back to 320. When things like this occur, it's tough to be overall bearish. But, this is just at a major fib level, the 38.2% fib on Tesla at 319. We need to close above that. Anything below that, in my opinion, the momentum is still bearish. But, Tesla, not that great in terms of bull or bear. Anything below 320 is still bearish, in my opinion, on Tesla. And with that being said, Amazon also looks really good. Amazon held above 222, 223. Got a solid close. I was bullish on Amazon in the 212s, 213 area. We got a bounce upwards. This was a bull flag. We got a rip to the upside. And now we're trading above a major level of resistance. Amazon, Google, Microsoft, NVDA look solid. Can't argue with that. But the other four don't look that great. So there's mixed signals in the tech stocks. And Apple is very far overextended. That strength cannot sustain itself. Overall, with the tech stocks in the tech world, it's a bit of a toss-up, 50-50. Do I want to be extremely, extremely long when things are 50-50? No. The other thing I want to take a look at is the IWM. The IWM is very far overextended. It is clearly trading outside of the upper level of the Bollinger Band. Very, very similar to what Apple is doing. We're getting an open and close outside of the upper level of the Bollinger Band. Very far overextended. Above the positive standard deviation outside of the Bollinger Band, what tends to happen is you want to see price return back inside the Bollinger Band or stagnate. So what's going to end up happening is the market is either the IWM, the Russell 2000, is going to either stagnate or get a bit of a pullback. You cannot become overly bullish up here on the IWM. If you are, you're a complete gambler, or you're just trying to force trades. Because something is not a good opportunity to go long, by default, the market is either going to stagnate or pull back. If bulls do not feel comfortable and confident to start going long or to continue going long, what ends up happening is the market is going to pull back. Okay? So I hope that makes sense. I hope that really makes sense. When we look at the NASDAQ, clear new all-time highs. When you look at the NASDAQ futures, we're still in a clear uptrend. The uptrend is starting to stagnate a bit. It's tough. It's really, really tough for me to be extremely bullish here, guys. Because it's just such an amazing opportunity to go short and to take profits. Just purely because it's such a great opportunity to take profits, man, it becomes very difficult to start leaning bullish. That's the only issue. And no matter how many of these other large tech stocks look good, just the overall fact that we're hitting a major trendline level of resistance on the S&P, it becomes such a good opportunity to take profits. And because it's a good opportunity to take profits, by default, it becomes a good opportunity to go short. So that's the issue. That's currently the issue, honestly, with the overall market. All of this, we have not even mentioned. We have not even touched the VIX. So the VIX, this is very, very important. This is one of the most important things that you have to look at, is because basically the VIX has an inverse relationship to the market. If the VIX is rising, then the market is going to be falling. Okay? There's inverse relationship, the opposite. The VIX, what does it look like the VIX is doing? The VIX is looking like it's trying to hold support here. So we've been holding right below this $17 level. We've been holding above the $16 level on the VIX for quite some time. Obviously, it has been looking bearish for days. It's been looking bearish for weeks. But we've held the $16 level. I've been saying that if the VIX is trading below $17, that is bullish for the overall market. Because if the VIX is falling, then that is bullish, because the opposite occurs. But if the VIX is holding a level of support and leaning to a bounce, if the VIX is going to lean to a bounce, then that's bearish for the overall market. The VIX holding this level of support, coinciding with the ES at a very major level of resistance, coinciding with now 50-50 of these large tech stocks either look good or not. Things are starting to look a bit scary. Things are starting to look a bit scary to be extremely bullish on the market. Okay, pragmatically, I'm gonna start leaning short in the next week or two. Most likely in the coming days, I'm going to start entering into some puts for 2 to 3 months out. This is my analysis on the overall stock market, and it's purely there's just too many factors to be completely bullish. It's like, now imagine a stock is at a major level of support. Okay, the VIX clearly at a major level of support. Is this the most opportune time on paper to start leaning short? Do you go short at levels of support? No. What is the best? What do we learn to do at support? We learn to go long at support. Do you go short at support? No. Generally, you don't do that. So because the VIX, because you don't want to go short at this level of support, what is most likely going to end up happening? We're going to get a bit of a bounce. I don't know how much we're going to bounce. I don't know how high we're going to bounce. But because the VIX is setting up for a bit of a bounce, what's the opposite of the VIX bouncing? The market falling. That's essentially what my thought process is. I hope this makes sense. We're doing a good job of compiling all the information and putting everything together in a succinct, digestible way. I hope this really helps you guys. I hope this is a fun video to watch. Essentially, when I was learning and when I really wanted to learn about the stock market, I wanted to look for information that I can easily digest, and where the person that was making the videos didn't sound annoying, or he didn't want to seem smarter than he actually was, etc. And then what I ended up realizing is a lot of the people, all they do is analyze the charts. Oh, I think this is going to end up doing this, and this is going to end up doing that. And if this happens, then this is going to occur. And then if that happens, that's going to occur. I haven't really seen anyone that actually trades or puts on any trades or actually like makes money. Like, it's easy to go long on a stock and hold for 4 years, or it's easy to go long on like a regular stock and enjoy dividends, but that's not what we're trying to do here. We're trying to make money consistently, day in and day out, week in and week out, with shorter term trades, day trades. We want to be aggressive on the market. We're not here to just analyze. We're at different stages in our lives. Okay? Some people, sure, they would rather a more passive. Even then, if people want to be more passive, right? The issue with a lot of these people that do analysis is they just are very good talkers, and they're very good at presenting. 100%. They're very good at presenting, and they're very good talkers. But they don't actually make any money from actual trading. And what ends up happening is people that are not privy to seeing many different types of people on the internet, they assume that these people know what they're talking about. But the people watching probably end up making more money than the people making the videos. So that's, I never wanted to make videos until I was actually making a lot of money from trading, because I just always felt that was very disingenuous. And you could just tell a fake. You could just easily tell a fake, and like 99% of the people making these videos are fake. That's the issue. But I try to make very high quality content that people enjoy, that actually does tangible things that people can actually make money. Most people don't care. I don't care. Like, most people, like, learning and like, oh, if this occurs, this happens, and this at the end of the day, the main priority is to make money, right? So we want to know how we can make money from these things. Oh, if this happens, oh, we're gonna fall. Okay, so if this is gonna fall, tell me what to do. Are we going to make money on the downside? Explain to me how I'm gonna make money on the downside. But people don't do that. That's the issue. Except, I try to do that, and I really like doing this because, it helps people make money. And Genuinely, very thankful to be put in this position and in this situation. And I hope I continue to provide you guys good analysis, and I hope you guys enjoy. All right. So that being said, that is my analysis on the overall market. Let's take a look at the crypto market. What did I tell you guys about the crypto market? Remain bullish. I was explaining different factors and different levels to remain bullish on Bitcoin, on Solana, on Ethereum. I explained so many different reasons to remain bullish. So many reasons to remain bullish. We held the 105 level. We continued to show strength and bullishness. We held above 108. This is just clear-cut bullishness, guys. So, to make it a very, very short and simple situation here, if Bitcoin holds above 107.5, we're going to continue seeing new all-time highs. 107.5 needs to hold on Bitcoin. And the reason why I'm so adamantly bullish right now on the crypto market as a whole is because Solana and Ethereum look really, really good. Okay? So Solana has been in a downtrend. We just recently broke out of the downtrend of the falling wedge. Solana, I've been begging you guys to be bullish on Solana down here in the 140s. High 130s. I was begging you guys to be long Solana. Now we are breaking out. We ended up hitting 160, pulled back, and now we're holding above 150. Solid situation for Solana. Nice and simple. Broke out of a downtrend, came back, retested it, and now we're holding this level of support for potentially a continued move to the upside. If Solana can hold above 145, 146 area, then we can easily just continue rising. If it falls, doesn't look great. Doesn't look great, because if it falls below 145, 146, it's most likely going to retest 138. If 138 fails, we can tumble. But overall, every single dip is a good buying opportunity on these cryptos. Solana looks good. Bitcoin looks good above 107.5. Solana looks good above 146. Ethereum is getting a lot of mainstream love. Ethereum was another stock at 2,300. I was saying to remain bullish on Ethereum. We are now trading above 2,500 on Ethereum. It's holding above. Once again, we're trading above the very major 38.2% fib on Ethereum, setting up for a continued move to the upside. How can you be bearish? How can you be bearish? Very, very simply put, you need to remain bullish at these levels of support and continue to remain bullish. Those were the levels on Bitcoin, Ethereum, and Solana. Very, very simple. Not really much else to talk about. And with that being said, maybe this week we get some more understanding of where the market wants to go. The overall stock market as a whole does look a bit bearish to me for this week, maybe next week as well. The stock market's bearishness might affect the crypto market as well. So we have to continue monitoring that. But overall, the overall stock market does look like we could get a bit of a pullback once again, because the S&P 500 futures are at a very major level of trendline resistance. And just to recap this has been in a very, very large, amazing uptrend from October of 2023. It came back and retested as support in August of 2024. Then in March, we got a break down below this trend line. We got a bounce back to the trend line, and it failed. And fast forward, moving forward, after this whole drop lower, we are now back at this major trend line level. So because we are at this major trend line level of resistance on the S&P 500, things are starting to become a bit shaky for longs. And if longs are going to feel a bit shaky here, that is most likely going to cause some shakiness in the crypto market. So that's something to take into consideration in the next coming days, especially. So with that being said, I hope you guys enjoyed the crypto portion of this. But in case something occurred, instead of me restarting 31 minutes, gold doesn't look great. Gold needs to reclaim 33.30. The Euro USD and the pound look great. with that being said, if you've been watching this entire time, I really appreciate it. This is my second recording. This is the second time I'm recording. Each time was really, really long, and editing and re-editing would have taken too much time. So I hope you guys enjoyed the video. Please make sure to like, comment, subscribe. If you guys want access to all of the trades that I actually take, the link to join is down below. 31 minutes in. If you guys have been watching, I really appreciate it. I really, really appreciate you guys. I really appreciate your support, the time that you guys are putting in. I hope what I'm doing is fun to watch and interesting and entertaining at the same time. And it's easily digestible and entertaining and interesting and fun. So I hope that makes sense. I hope you guys, like, comment, subscribe, do all that good stuff. This is my thought process for the next coming days. I'm overall bearish, neutral to bearish. I'm not going to be bullish on the market. Be very, very careful, in my opinion, to be extremely, extremely bullish on the market. It makes the most sense to start taking profits on longs and to start leaning bearish. That is my thought process for the coming days, for the coming 2 weeks. Overall, in the coming months, very, very bullish. The ES is going to see new all-time highs in the coming months. Almost guaranteed. But in the coming week or two, we might see some pullbacks. I'm going to be bullish on every single pullback. But I also want to take money. I also want to make money on the way down. So I hope I gave a good, holistic understanding of what my thought process was. Hope you guys enjoyed the video. And I will see you guys tomorrow morning. Thank you. Have a great day.